Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Cromwell Coulson, CEO of OTC Markets. Cromwell, nice to see you.
Thank you for having me here today, Andy.
So I guess we should start off by talking about the business itself and what OTC Markets is and does for those who aren't familiar with your company.
So OTC Markets is a regulated market operator. We provide the critical market infrastructure for broker-dealers to be able to trade 12,000 securities publicly. We distribute the prices onto investor screens into broker trading machines, and we also provide services for companies to provide disclosure, demonstrate the financial standards they can meet and their compliance with securities laws so that broker-dealers can lawfully trade those securities.
So is it fair to call it an exchange? And how does it differ from the New York Stock Exchange or the NASDAQ then?
So you can call us a market operator. An exchange is a more defined word, and we're regulated under something called Regulation ATS at the SEC. And Regulation ATS is called Alternative Trading Systems. It is an exemption from registering as an exchange. We have 3 ATSs. They all offer a slightly different market microstructure to serve different broker-dealer business needs. They all interconnect, and we're regulated in many of the ways the same way as an exchange. So the idea of ATSs is exchange light to do innovative things.
Right. So, but companies can list their securities on your platform, right? And they would do so and not list on the other exchanges, I should say.
Yes, we offer an alternative. And the alternative that we offer, because of technology and the network effect and all the functionality that we keep building on top of it, has become a better substitute to listing on a regular stock exchange.
Right, and you're publicly traded. We'll get into that a little bit. Let's talk about the history a little bit, Cromwell. Maybe people are familiar with pink sheets, and that's part of your history. Talk about where this business came from.
First, I should probably just establish where we are today. We are a market that brokers and investors are able to trade hundreds of billions of dollars of securities. Over 80% of the dollar volume is trading securities, ADRs, and ordinary shares of international companies that are listed elsewhere. 90% of the volume is in companies that don't even qualify as what the pink sheets was related to was penny stocks. So we've really transformed this market with 13,000 securities, 12 to 13,000 securities that are publicly quoted. The changes, where it's come from, is there used to be this really inefficient market infrastructure, a phone book that people would look up and say XYZ stock, and they would go through and find which broker-dealers were interested in that stock, and they'd get on the phone and call around for a price, and the regulation said you only needed to call 3 brokers, so if you were the 4th one on the list, you didn't get the phone call.
Right, and so you saw this, you were working in the financial services business decades ago in the 1990s, saw this opportunity, and then you and some partners actually bought this company and you transformed it, right? Tell us about that journey.
Yes, I was a trader for a large NASDAQ market maker and OTC market maker, and I hated the way the market worked from a price transparency. It was inefficient. They printed and delivered a new phone book every day, so we're very good at killing trees and paying delivery men, but they weren't using any technology. My first impulse was to call Michael Bloomberg and have him fix the problem so I could keep trading and investing. When I called Mike Bloomberg and I said, you should buy the National Quotation Bureau so you can put all the stocks on your screen, he said, that's the dumbest idea I've ever heard, and hung up on me. I put together a group of investors, and we bought it with the idea of making the market transparent so investors could get best execution. My investors consisted of a lot of longtime deep value investors who had always found bargains in the OTC market, and they'd been frustrated with the lack of price transparency. So they saw the opportunity to really improve from an investor experience. Now, to improve the investor experience, you have to work with the broker-dealers. And that's really driven one of the first principles of our business. Our goal is to help a regulated broker-dealer be able to efficiently and transparently trade any security that there's investor demand for.
Right. And what is the business model here? How do you make money? I should say that you and your partners own 30%, and then 70% is publicly traded, basically, right?
Well, I own with my family
Right.
a little over 30%.
Oh, 30, okay, right.
And the other investors now have shares in our publicly traded
Right,
company.
got it, okay.
And employees own a big piece.
Right.
We're a pretty conservatively run company just because my background as a deep value investor is you want to survive through all cycles.
Okay.
But the business model is pretty simple. It's a media business model. I didn't want to be Dick Grasso and run a building or a floor. The internet was coming along. Professional traders had this incredible tool on their desktop, the Bloomberg terminal. Others had the Reuters terminal. Others had different terminals. We all had great information. And the paradigm was shifting that you would be able to put that information out to the world. And so our business model was to, one, provide the technology for broker-dealers to be able to trade with each other and facilitate them providing best execution to investors. And the second part of the business model was to put the price data out to the world. And if you put the price data out to the world, it becomes more valuable because more people can see it. It's used more, which makes it more useful. That was the first part of the market. And that took time because you have to build a network. You have to convince broker-dealers who've been making a pretty good living trading things on the phone with wide spreads that they only know where the best bid or offer is to start to change. And when you change it, technology starts to show up in the network. So today, we have Citadel, we have Virtu, we have Jane Street, we have all these electronic firms, Old Mission, all these different players, and we also have specialists in community banks spread across the country. D.A. Davidson in the middle of America, serving those types of companies, all making markets, which creates a competitive public market for companies on an electronic platform where the prices are visible to all.
So how do you make money, though?
We charge broker-dealers what I would call a Costco type model. It's a subscription basis mainly with some transaction fees. Is for our market data, is we license our market data out there to either on a per user basis across market data terminals or an enterprise license to the big online brokers and wirehouses. There, with the per user, I would say we use a comparable model to the exchanges for the data we have. And we've grown the data incredibly. I mean, I think we had less than 2,000 unique securities when we started. We now have taken that up by a large amount. And then we have a third business, which I would say is the second principle, which I didn't understand when we first bought the business, because I was a value investor. And the parts of the market where you could find underfollowed value was you would dig around for financial information. You would search at the SEC, they had paper financial documents. But the second part is you cannot have an informed and efficient market without issuer engagement, providing another information stream.
What is the strategy, Cromwell, going forward? How are you looking to grow the company?
So for us, I believe the biggest short-term opportunity is for international companies to become better engaged with U.S. investors. Approximately 25% of the companies whose securities are traded on our platform have a relationship with us to provide ongoing disclosure. The other ones may be listed on a foreign exchange, SEC reporting, but there aren't the management certifications. There's not the focusing on putting good information onto investor screens and into broker machines. And once you get that relationship, you can start helping those companies demonstrate their levels of financial stability and their levels of compliance with different regulatory frameworks. And that makes the securities easier for brokers and investment advisors to trade.
What kind of companies are listed there? A lot of banks, right? Energy companies, and you talked about, we'll get to the ADRs in a second, but first of all, domestic ones.
So the traditional domestic companies was a range of different companies that didn't want to be on an exchange. There were established companies, which were often more conservative and well capitalized, and management held large amounts of the cap structure. And those were the traditional deep value situations that Warren Buffett would buy when he was much smaller. And then there are the companies that there's financially distressed companies we would see. When a bankruptcy takes place, it would become part, and some of those companies were going to the end of their part of the cycle, and some of them were turning around. And then we have smaller companies in the U.S., venture companies. And those companies are companies that are trying to become a success. When we launched our corporate services business, which is the third leg of revenues, is we tiered our market into 3 different tiers with the idea that if we could create a structure that incentivized companies to provide the best amount of information they could possibly provide, they would gain by rising up the steps.
What about some of those foreign companies? What are some of the big names?
So the big names are Roche, is a fantastic name. Adidas, Heineken. These are all global champions. They're listed on a great national exchange in their home market. They provide disclosure under their home country standards. And there's an exemption in the United States from SEC registration that if most of your nexus is outside the United States and you provide all of your local disclosure, both your regulatory reporting and your exchange notices in English to U.S. investors, and the majority of trading volume takes place outside the United States, you can be exempt from SEC registration.
Right, so for Heineken, Roche, and Adidas, they meet those criteria, and the reason they want to do that is that it saves them a lot of time, money, and effort to simply be able to list where you are.
Yes,
Right.
it's like a express passport into U.S. markets,
Right.
and it gives them, though, ownership of a U.S. trading symbol. So they can put out their press releases. There's a symbol which connects their local trading and their U.S. trading, so information asymmetries go down. And the U.S. is the biggest financial market in the world.
Right.
If you want to be a global company, you have to be here. I mean, we have a line where we say list local, trade global.
Where does your stock list?
So we have 3 market tiers. Mm-hmm. There is, at the lowest tier is our pink market, the pink open market, mm-hmm. which is for companies which it doesn't have financial standards. Then we've got a middle tier, which is the OTCQB venture market. And that has some float standards, background checks on management, key things to help investors connect the dots. And at our highest level is our OTCQX best market. And our stock trades on our OTCQX best market. You cannot be a penny stock to be on the OTCQX market.
Right.
You need corporate governance. You need all these basic best practices of being a public company. However, we try to do it in a more streamlined, data-driven approach.
Right. What do you do, Cromwell, to protect investors from scams, penny stock frauds? You caveat emptor, you've got the skull and crossbones, compliance flags, you call them. What do you do to protect investors?
So we have a market integrity team that is very much focused on how do you put the information into the market so an investor, an intelligent investor, can make an informed decision. It's a bit different than the exchange model. The exchange model, if I go back to the traditional media, is you're buying a paid brand. Our platform, we build so companies can own and earn their reputation and their valuation. And those tools which they can do that. Now, one of the problems of being listed on an exchange is there's a huge amount of complexity designed to get rid of the supposed problems you've brought forward, even though in general, people figure out another way around. We take a little bit different approach that we want to flag risk. So different companies have different risks. We see promotion. We put up a promotion flag. And that promotion flag goes out to warn investors that promotion is taking place. It also gets fed into broker-dealers and clearing firms so they can heighten their own compliance processes and AML procedures. Mm-hmm. We then go back to the company and have them do a market announcement and say whether they've paid for the promotion, whether they agree with what the promotion said, whether insiders are trading in the market or there's a blackout period, whether they're doing an offering. And we get that reactive mode to put better information in the market. And that also benefits the companies that aren't doing those things. We're not adding complexity on the front end. We're using the tools of a public market to, when we see things on the screen and the market is showing something, let's have the companies comment.
Got it. And final question, Cromwell. Your stock has been an outperformer, but has lagged recently. What accounts for that underperformance, and what are you doing to get it to be an outperformer again?
So there are the Jack Welch CEOs who want to be quarter to quarter. When you're trained as a value investor, your view is how do you make the changes over 5 years? Every 5 years have a different, be in a better position. Have made changes that grew the business and taken opportunities. You'll still also have some, ventures that don't work out. So the way I look at it is the stock price is a lagging indicator to the investments that we're putting in behind the scenes. And if they work out and if we build value, the stock price will take care of itself. The role of management, which I repeat until my management team gets blue in the face, is number one, we have to be stewards of our business, both the markets we operate and the clients we serve. The second part is we need to be sharp commercial operators. And the third part is we're fiduciaries for shareholders. I'm the biggest shareholder in the company. Most of my net worth is tied up in the company. And so my bet is that over time, the business of selling technology to financial markets will work well. Now we have some new things that we've announced that will hopefully move the needle.
Cromwell Coulson, CEO of OTC Markets, thank you so much for joining us.
Thank you.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.